Today, I'm sharing an interview with a mortgage loan officer. We are exploring the mortgage loan process and the step-by-step of the loan process. Okay, let's get started. Hey friends, Mary Howard here with There Is No Place Like Home NC, Red Boots Realty powered by eXp Realty. If this is your first time on the channel, welcome. Please take a moment and hit that subscribe button below. Don't forget to hit that icon bell to be notified of the new videos that get posted every week. Today, I am interviewing Ariel Best, a mortgage loan officer with Rapid Mortgage. All right, now to the interview.
Thanks, Ariel, for hooking this up today.
I'm a big fan of your website. Love the name of your website. I just want to click my heels and be like, look at me. I'm like, what's your name? Dorothy? Is that it?
Dorothy, yeah.
Okay, so let's get to the meat and potatoes now. So what's your first question?
So my first question is, when they call you up, what's happening?
I'm reaching out within 30 minutes, introducing myself. If they can't talk right then, setting up time to talk to them. Try to get contact with them, make contact, and then explain to them that we don't bite. We're not here to say no. We want to help them get into homes as much as you want to help them get into homes. So we're problem solvers. We're going to figure out the best way to put a loan together for them, the best way to get all of our assets and income and everything sorted out. We're going to it's like a puzzle. All I do all day long is figure out puzzles for people. I just have to find the pieces sometimes. But our job as a loan officer is to take all the puzzle pieces that you give us and put a mortgage option together for them that's going to fit what they're looking for and fit where they're trying to buy. So if it's USDA and they need to be farther out, then there's going to be conversations about here's where you can buy, here's where you can't. If they are a veteran or if they're active duty, we're going to figure out using their VA loan benefit. If it's neither one of those, then we're going to look at conventional and USDA, and then we're going to go over down payment, closing costs, which is equal to cash to close. So we're going to go over, here's how much money you need to make sure you have available. Here's how much money you need to be prepared to part with and all that good jazz. So we're going to cover A to Z. Sometimes that takes multiple conversations because we take pretty much all of the knowledge we have, condense it down into as small of a segment as we can and just dump it on them. Unfortunately, in the first couple of minutes we meet them, and then we're like, we need all of the things that you have. I need pay stubs, W-2s, IDs, bank statements. I need your firstborn and probably your left kidney. And then we take all that and we say, okay, here is a pre-approval letter because this is what I have been able to prove you make and how much money you actually have shown me that you have.
So after you get the initial conversation, they give you all of the documents, you give them a pre-approval letter, and then they're done with you? I know that's not right.
No, I'm going to pester everybody in the transaction. So kind of timelines for people that need timelines. It's not instantaneous, and especially if it's a complicated set of puzzle pieces we're given, if they're self-employed, if it's anything crazy we have to work with on credit, if there's anything with student loans that we need to negotiate or work out, if there's any paperwork beyond the normal set of documents, the pre-approval could take 30 minutes. The pre-approval could take 3 days. Because if I don't have everything I need from them to be able to confirm, I'm going to confirm income and assets and make sure that those numbers are solid before I'm giving out a pre-approval letter, because I'm lazy. I don't like working twice. So I don't want to have to go back and fix something because I didn't do a well enough job at the very beginning to make sure credit and income are okay. So it could take a couple of days, but I normally will say, hey, it's going to take me until XYZ date to get you a pre-approval. The difference between a pre-approval and a pre-qualification is pre-approval means I've verified everything. So I've seen pay stubs, I've calculated your income, I know that you've got the money, you're good to go. Pre-qualification means that I'm taking that client on their word for what they told me they've made and what they told me they have in savings, and I'm just giving them a letter to go buy a house, which is about, it's about as safe as trying to baptize a cat, with no body armor. That's a bad idea. So I don't give out pre-qual letters.
Check down in the descriptions for your downloadable list of documents that the loan officer will be requesting before your pre-approval is issued.
They've got their pre-approval, and now we're out shopping for houses. When will they need to come back to you?
It depends on what kind of loan they have. If they have a conventional loan, then I don't need to make sure that that house is going to be conventional approved, because pretty much everybody accepts conventional offers. But if it's a VA offer and they think for some reason the property isn't going to go VA, by all means call me and say, hey, do you think it's going to go VA? Because if it can, sweet, we'll make it work. FHA is sometimes the same. USDA is the only one where we tend to run into a hard stop. because USDA is based on area,
Location.
which
right.
we've dealt with before on transactions. So if it's not USDA eligible, you're not going USDA. That's where I would get back involved. But from the time they are shopping to going under contract, don't have a ton of contact with me unless they want to know numbers on the property. And then once they're under contract, that's when I get back involved again. And I'm like, all right, so now we start the loan process. You've been pre-approved, but the processing on the loan hasn't even started yet. So now there's 5 pieces to getting a loan closed: credit, income, appraisal, title, homeowners.
Hit that like button if this video is helpful, and please leave your questions or comments below.
So we've already dealt with 2 out of the 5. We already know those are good, but now we have to get probably updated pay stubs and updated bank statement to show that any money you put down on the contract actually came out of your account and wasn't just cash you handed over. I could go over the list of don'ts, but the list of do's is actually much shorter. Do call your loan officer if it involves a number of any kind, period, point blank, end of conversation. A 5-minute phone call, is it okay if I do XYZ with my money, is a lot faster than a, oh, well, I had some cash, so I decided to go buy a cashier's check and use that for the deposit. No, don't do that.
No.
Because you're just going to make yourself problems. You're going to make me problems, and it's going to be a headache. So the only do I have is do call your loan officer, get 5 minutes of their time. Hey, is it okay if I do this? Most of the time it's going to be fine, or you're going to figure out a solution super quickly. But don't just blindly go start doing things as the buyer for a house and think it's going to be okay. So, but anyway, first 2 things are covered. We're going to re-verify a couple of things, and then we have to order the appraisal. Right now it takes anywhere from 5 days to 2.5 weeks because appraisal turn times in the middle of a pandemic and the holidays are crazy. Title work can also be about the same, because what people don't understand is we don't just send the order to the attorney and the attorney's like, yeah, sure, I'll just generate title documents. That's not how it works. They use what's called an abstractor. So they're going to get an abstractor, which is a third party from them that's going to either have to go to the county or go electronically, search for a chain of title to see who's owned the property for at least 2 years. They're going to use a vendor from a title insurance agency to insure the house, or have to get a title insurance quote. They have to do a whole bunch of stuff on the back end, and that can take up to 2 weeks sometimes. So we have about 2 to 2.5 weeks of a 30-day contract at this point, and people are like, what takes so long to close on a house? All of that crap. All of that crap takes so long to close on a house. Like, it takes some time to get all that stuff in line. Homeowners doesn't really take 30 days. Homeowners takes like 25 minutes. But we still have to have valid homeowners insurance in order for us to be able to close on the house. So then we get all that stuff together. We have to send it all back into underwriting, and that can take, like, the final underwriting, I think we're averaging about 24 hours from final approval to the clear to close. But you still have to give at least a day for that. You have to give at least a day for the closer and the paralegal at the attorney's office to be able to talk to each other, balance all the numbers, do whatever they need to do, wave their magic wands. But there's different pieces, and you can't do this step till this step is done. So people are like, why does it take so long? Because it's a lot of stuff. We're giving you $250,000.
Because there's a lot of people that's got their little fingers in here, and they all have to be working together.
Mm-hmm.
Yeah.
Yep.
Closing costs versus down payment. So cash to close.
So your down payment is going to be the percentage of the actual purchase price that we tell you is your required down payment. We're going to use real easy math on them. So we're going to go, let's say the purchase price is $200,000 and you're doing a conventional loan and it's 3% down. So $6,000. That is your down payment. Now you're also going to have closing costs. And what that is you got to pay the team to put the loan together. So got to keep the lights on, pay the processor, pay the underwriter, pay my team. Normally an origination fee. Then there is the appraisal fee, and then there's a couple of certification fees that we charge. So normally that's about $1,500 to $2,000 of closing costs. You have about $2,000 for title and attorney costs, and then you have between $1,500 and $2,000 for setting up escrow, which is your homeowner's insurance, your taxes. Because if you're doing a loan and this is your first purchase, you have to escrow. If it's a government loan, you have to escrow, which means putting your taxes and insurances in with your mortgage payment. So when I give you a payment figure, that's tax, tags, and title for the payment every single month out the door. There's no extra fees or anything. So aside from homeowners insurance, or I'm sorry, HOA dues, excuse me. Let me go ahead and say that. HOA dues are not included with your monthly payment. You do have to pay that one bill separately, but that's normally about $15 to $30, and it's paid quarterly. So those total of closing costs, though, are the things it takes to get the loan to the table. You got to pay you got to pay for the services you're getting to get the house. You have to pay the attorney, you have to pay the lender's origination fee, you have to pay the appraiser, and you have to put money in escrow, because otherwise they won't be able to pay your bill for you at the end of the year. Those are normally between 2 and 3% also of the loan amount. So you might have a $6,000 down payment, but you might also have $5,500 in closing costs. So you're going to have 11.5 that you have to bring to the table. Any money you put down on the contract as your earnest money or due diligence money gets backed out of that number if you close on the house. If you put $2,000 down, you're bringing 9.5 to the table. So you still have to pay all of those. The only thing that you are technically required to pay as the borrower is going to be the actual down payment. So if the seller has negotiated and they're paying closing costs, they can pay the $5,500 and you'd only bring the rest of your $6,000 to the table. But if they're not paying, which is tough in this market, you're going to be coughing up all the money. So that is what it is.
Good. Nice explanation.
Well, and you'll see the loan estimate doesn't break it down very easily. You have closing costs and it line items everything, and then it has a funky number for the down payment. So cash to close is the equal of those two. And no, we don't mean actual cash to close. I will say this too, because I had a client try and bring actual cash to close. We mean the cash you will need, but keep it in your account and I'll tell you when to do the wire or bring a check. I will tell you, do not go get cash out of your account.
Do not. The attorney will not take $11,000 in cash. They won't do it.
No, they won't. So yeah, the cash that's the total of those two numbers will tell you when to wire. But no, there's no extra past that. That is just what the bottom line is that you have to bring.
What about student loans? How do they affect a buyer?
First things first is, are they in good standing or are they in collections? Because that's the instantaneous deal killer right there. If your student loans are in collections, and I don't care if they're going to get forgiven, you need to make sure that they're in a good standing. Because on all loan types, all of them, we're going to call what's run a CAVERS report. And I couldn't tell you what it stood for if you put a gun to my head right now, but the CAVERS report is going to tell us if there is any federal debt that's currently in a derogatory status. Why would I give you more federal money if you haven't paid back the first set of federal money? And I'll stay off my soapbox about student loans, but logistically, the government is not going to be like, yeah, we'll give you FHA dollars if you haven't paid back student loan dollars. So first off, they need to be in good standing. And I don't care if they're forbeared or deferred or on an income payment plan, it's $0. As long as they're not on your credit report as a collection item, that's step number one. Because the big piece there is if they are in collections, it can take up to 9 months for you to rehabilitate those out of collections. So if they are in derogatory, you could put a whole year on your home buying by not having them in a good status.
Wow.
Yeah, big deal killer there. Big deal killer. So
student loans are not a bad thing, but they need to be not in collection. Yep. All right, so let's say they're not in collection. She's been paying her bills.
What we're going to do with the student loans depends on the loan type. So on a conventional loan, if it's on an income-based repayment plan, then I get to use 0 if you're paying 0. We're not going to count any of your student loans against you if it's on an income-based repayment plan at 0, or if it's on $15 or whatever the payment is. If it's less than 1%, we're going to want to use that number for conventional versus using 1%, which is the default of pretty much every other loan type, circumstances depending. So for conventional, income-based, or we use 1% is the rule. I think Freddie Mac, because there's 2 different conventional channels we can go, Freddie Mac or Fannie Mae. Freddie Mac, I think, is at 0.5%, but I could be wrong. I'll have to double check. USDA is using 0.5% of whatever the amount is on your credit report for the balance, or whatever is listed on the credit report, whichever is more. So if it's listed more on the credit report, we have to use that number. If it's listed as 0, then we get to use 0.5%. On FHA, it's a hard 1%, no matter what, end of conversation, unless you can get and approve a fully amortized payment plan on the student loan. So just like a mortgage that has to be paid off after 30 years, if you can prove that they have enrolled with their student loan in the same kind of a payment plan where the payment will not change and is fixed for whatever the term is, and it will be gone at the end of that term, we can use that payment.
Get your copy of documents that the mortgage loan officer will need in the descriptions.
Nice chatting with everybody, and we'll catch up with y'all later. Bye.
Thank you for watching this video. Click the link below to watch the next video. Don't forget to hit that icon bell to subscribe. This is Mary Howard with There Is No Place Like Home NC.